Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, to help you out with some fundamental analysis, Deven Choksey of DRChoksey Finserv joins us on the show. Well, let's talk about the stock of the last 90 minutes yesterday, which was Granules. The stock got clobbered. From the high, I think, of around 620, the stock went down to 520 because the street was very, very surprised with what they saw. That facility that has nearly 70 to 80% of their business, that was back in the dock. Though this morning, the release that's coming out suggests that things are not as bad and they're looking at fixing that particular plant. What's your view at around 530 rupees? The problem, I think, yesterday was the street was heavily on the long side, which came in for some profit taking. Your take at 530.
Yes, Nigel. Good morning. I think that's the point. I think when you are fully invested into a company, and I think when the valuations are at premium level, there is no scope for any error. That's what I think the learning is from this market, particularly in mid-cap and small-cap companies, wherein I think the players are most, opportunity-driven, wherein they would probably, I think, try and trade these counters as much as I think they could in a given period of time. So probably I think one disappointment or one bad news, as you may want to call it as, probably I think the market is not kind enough in holding those stocks, even on the fundamental reasons. So we don't have the full coverage of this company. We have a soft coverage. We believe that I think in the price I think which has fallen, I think this becomes slightly more attractive than it was before. So one will have to relook at I think the entire proposition. Maybe we'll study first the entire management explanation and thereafter take a call on this subject.
Okay. Deven, hi, morning. Defense is definitely in focus today because yesterday we had the Defense Acquisition Council. They announced procurement of fresh orders worth almost 22,000 crores. And I don't know if you saw this news, if you track this company or not, Solar Industries, they are also into different formats of defense manufacturing, right? And they got export orders for different defense components worth over 2,000 crores. So maybe a word on Solar, if this is something you've looked at, or otherwise any other defense stocks that you would be comfortable buying.
Yeah, good morning, CB. Yes, Solar definitely, I think it's a company in our coverage and we've been holding it for last more than 10 years. So certainly, I think we can talk at length. Both industrial explosive orders that they have been receiving from the coal mines, and at the same time, the defense explosive orders, I think they've been receiving regularly from one or the other plant, including the one which they received in the last week, which was an export-driven order. So all orders basically, I think, are suggesting that the company is definitely growing and growing at a very steady pace. What we have learned in this business that they would take at least, I think, 5 to 7 years before they are ready to supply to the defense. And that's what I think this company has achieved in the last 10 years or so. They have systematically invested, they have created their acceptance or approvals in the defense segment. And today, I think they're receiving the regular orders. So we certainly like, I think, the proposition. Of course, I think as I've understood, the order is going to be executed over a period of 4 years' time. And that's what probably I think would mean that 2,000 crore for a full period of time, I think, which they would be executing. But nonetheless, I think the margins and otherwise also, I think these orders fetched for this company, they are really good. So one needs to be invested in this particular business.
Deven, you said you got into Solar Industries. You've been holding it for 10 years. Did I hear that right?
Very specifically, I think in 2012-13 we had.
Wow. Wow,
Deven,
that's something.
Deven, where is the party?
I never knew that I think I'll get this kind of wealth generated in 10 years' time.
No, I mean, I think it's all mostly sort of hindsight, right? I mean, you don't know when you're buying it, you don't know. It gradually works. Of course, you got to hold on to it and you got to have the patience and the commitment and all of that. It's as they say, investing is simple, but it's not easy. That's, I think, the crux of it. Anything else you're doing, Deven, out there? Market-wise, stock-wise, anything on your radar?
So we continue to like, I think, some of the interesting propositions. One definitely among them is Tata Technologies. We believe that I think this company has a significantly large play to offer going forward. With an end-to-end solution provided today in the automobile segment, they are now with Air India, with Tata. They are also playing significant role in the aviation segment of the business. So today, auto is about 83-84%, and aviation is around 16-17%. The mix is expected to change to 65% to auto and aviation to around 35% in next 2 years or so. So if that does happen, probably this company looks relatively more interesting. Having corrected from its listed price to what it is currently, I think we find this company interestingly positioned. Similarly, I think we find some of the other companies which are looking good for investment purpose. Of course, I think will take longer time. One among them would be Geo Finance, and another one would be Bajaj Housing Finance. Both these companies have interesting business model to talk about.
I know. I remember. I mean, you were very, very optimistic on Jio when the carve out was happening. I remember a, offline conversation, and you explained the rationale to me in terms of just the growth runway ahead for an entry like Jio Finance. They went on a different note. Are you taking a bite of Swiggy? They're promising full profitability at a consolidated level by third quarter of next year. FY26. That's right.
It is definitely should be a positive thing to note about that they are getting into the profitability, and systematically they have been creating the position for themselves in every vertical, be it in quick commerce vertical or be it in the food delivery vertical, dining out verticals. In each of the verticals, they are basically creating systematic position, creating a larger hooks for the customers, maybe doing the upselling within the range of the customers as well. So we certainly like the proposition, and the consumer tech companies like Swiggy and Zomato, they have relatively more things to offer for sure. The only concern that one would have is the valuation at which they are currently quoting. If the valuations get corrected for some reason, then it's a good opportunity to buy into. Currently at about more than 1 lakh crore worth of market valuation, and I think the promise to make profit next 3 quarters after and 4 quarters, I think you're paying significantly high amount of premium. That is what I understand at this point of time. So maybe I may miss out the bus though, but I think I would still wait for some time. If Iran market gives opportunity at lower levels, that would be a better time to buy into this kind of companies.
Sure.